Hey there, Brian D'Amico here from VectorVest, and welcome to today's special presentation. We're going to look at how to create an income sandwich. And you might be thinking, what's an income sandwich? Well, it's a way you can make money in a sideways market. You might also be thinking, why is it called a sandwich? Well, all the action remains in the middle, and it's protected on both the bottom and the top. Why is this so important? It's important because when the market or even a stock moves sideways, you feel like you're spinning your wheels a little bit. Your portfolio stalls and goes nowhere, and you get frustrated because you're not growing your account as fast as you'd like. Instead, you want your portfolio to continue to grow no matter what the conditions are. So what's the solution? The solution is to have an income system so you get paid when the market moves sideways. Today, we're going to look at a trade that will help you do just that. You're going to learn how to assemble the income sandwich. We like to call it the income sandwich because you can think of it like a sandwich. The inside of a sandwich has things like ham, turkey, cheese, maybe even lettuce and tomato, all laying flat, right? While you could eat it like that, you might not be sure what direction the food might go when you try to hold on to it. So you want to contain it. To do that, you put a piece of bread on the top and bottom of the sandwich. But before you do, you might spread some nice tasty condiment on each slice of bread, maybe mustard or mayonnaise. Now you have your sandwich. Most likely the food stays between the bread and you end up satisfied. If you start to see a possibility the food might break through the bread, you react and you do something about it. If you don't do anything and the food just busts through the bread, you have a mess on your hands. Literally. Okay, why do I use this as a metaphor for our income trade? Let's say you've got a stock moving sideways. You want to set boundaries above and below like bread. As long as the stock stays within the boundaries, you make money. You might be thinking, how does that work? How do I generate income from this trade, especially if the stock just moves sideways? Let's add more to this. A stock at any point in time can either go up, go down, or sideways. Based on probability, it's more likely to be in this area, a little less likely to be out here, and even less likely to be out here. So there are other people out there who like to gamble. They basically place a bet. Some people bet the stock will get up here. Others bet the stock will go down here. Since there are other people out there willing to place those low probability bets, you will basically be the casino who takes on that bet. And remember, over time, the casino always wins. Let's look at how this works. There are people out there who buy some really cheap, low probability calls. So if they are willing to buy them, we'll be the one to sell them the call. But that would be like a naked sandwich. So just like with our sandwich, we're going to have protection. To protect us, just in case the stock does go up, we're going to buy a call up here. When we sell the call, we generate a credit. I'll denote that as $2 signs. We'll use some of that money to buy the call for protection. On the other side, since some people want to buy a put down here, we're going to sell it to them. Again, we don't want to have a naked sandwich, so we buy a put down here to protect ourselves. Selling this put generates a credit. We use some of that money to buy the put for protection. In the end, think of it this way. This cancels out, leaving you with a net credit on both sides. Also, keep this in mind. All 4 of these trades are done at the exact same time as one trade with your broker. As long as the stock stays in the middle of the sandwich, we make money. If the stock starts to break through the sandwich, we need to take action. Let's look at what's called a risk graph or a profit and loss graph. The bottom axis is the stock's price. The y-axis is your profit or loss. I'll draw a line here representing break even. Let's first look at the naked sandwich and then the sandwich with protection. When you sell a put, you generate a credit. I'll show that as a flat green line. If the stock goes up in price, that's good. You make money. If the stock price goes down, notice you can still make money, but that amount gets lower and lower. If the stock's price drops too much, you would have loss potential for as low as the stock can go, which is 0. I probably should have drawn that line to connect in the corner here, but work with me on this. On this side, when you sell a call, you also take in a credit. If the stock stays flat or moves down, that's good. If the stock moves higher, your profits get lower. If the stock moves too high, you'd have unlimited loss potential because the stock could go up indefinitely. And that's definitely not good. So if you look at this, you've got these two really long red lines, and you don't want that. So you want protection. So you buy a put down here, and you buy a call up here. By doing that, you've capped your loss potential and reduced your maximum loss tremendously. Let's look at an example. Here's a graph of Baidu. As we said before, a stock at any point in time can either go up, go down, or sideways. Based on probability, it's more likely to be in this area. It's a little less likely to be out here, and even less likely to be out here. So let's build a trade. You could sell this put down here and receive $131 per contract. Notice it's a low probability strike. At the same time, you would buy this put as insurance and spend $61 per contract. On the other side, sell this low probability call and receive $161 per contract, and at the same time, buy this call as insurance and spend $94 per contract. All in all, giving you a net credit of $137 per contract. Now, if you did 10 contracts, that would be a net credit of $1,370. Here's a look at what it would look like on a risk graph. And as I build this trade, the risk graph, or the profit and loss graph, will appear on the right-hand side. The last time I showed you the profit and loss graph, the price action was along the bottom x-axis. This time, since the price is on the y-axis, you'll notice the profit and loss graph will appear on its side compared to what it looked like before. If you just sold the put all by itself, just sold the put, you'd receive $130.50, as you can see here. But you're naked, and your maximum risk is super high. If you add to that selling a call as well, your credit is now $292. But look at your max risk. It's infinite. We don't want that. That's a naked sandwich. So let's buy protection. Here, we bought protection. Notice the max risk is drastically reduced. Instead of being infinite, it's only $363. Your credit is $137 per contract. If you did 10 contracts, you're looking at a credit of $1,370. And what you're looking at here is an example of a trade we put together just a few days ago in preparation for this video. Notice the trade is already up $170, which is over 12% of the credit we received and is halfway to our profit target. As you can see, learning to trade options is an important tool to have in your toolbox. In fact, the founder of VectorVest, Dr. Bart DeLito, lists it as the 5th of his 7 secrets to making money. You've got to learn to trade options if you want to uncover the full potential of your portfolio. We highly encourage you to do this. If you're ready and want to learn how to use options to generate income, the best course available anywhere is the Options Paycheck course. In a matter of 7 weeks, you'll have a complete income system set up in your portfolio using options. Go to www.optionspaycheck.com for more information. Thank you for watching, and we wish you continued success in your investing.
Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. click right here. If nothing else, folks, just hit the subscribe button right here.